What's good, guys? Day 4 of our bootcamp right now here on YouTube. Let's get into it, guys. Today's topic, very interesting. It's gonna get very spicy, I would say. It's market structure. But hey, is market structure now king or is it trash? Is it too basic or is it really what you need in your trading? Well, guys, to be honest, I have here a couple of things to tell you about market structure because I came from a time in trading where market structure was the absolute king. Everyone used it. Smart money concept traders loved it. They've been talking constantly about market structure. They always said, that's exactly what we need. That's the direction of the market. When price is printing higher highs and higher lows, that's the trend you're gonna follow. And if the price shifts back down and it's reversing, printing now lower lows and lower highs, it's a bearish trend, and that's exactly what you have to follow. But the thing is, most people then came up with new things because they understood that not each break of structure contributes into price reversing or into the continuation. And that's absolutely true because you cannot just pick up each break of structure and validate it as a reversal, because where will you end? Where will you start? In reality, it's gonna just be completely pointless to mark all of these out. So you need to understand that market structure is definitely not the only concept you're gonna follow. But to be honest, market structure is the roadmap of everything. I use market structure and I started to love it because in the past, as I told you, people have been praying for market structure, right? Like it was that time with the SMC communities. Everyone has been printing market structure and everyone just came up with the analysis after price moved. Let me know in the comment section if you are from that time area. Basically, I've been trading the strategies I've had back then, and on one week it worked pretty good. The other week I was basically losing everything. Then I thought about I need to use the 1 hour time frame, the 15-minute time frame for market structure for the direction, and I was always completely confused because I've been mapping out everything. Because market structure in reality just provides you data. What kind of data does it provide you? Higher highs, higher lows, and lower highs, as I already told you. And you can then validate and come up with a strategy that will tell you then specifically when a higher high or higher low, when we break through that, if that is now a break in structure. Because the idea of a break in structure, the classic BOS, means we break through that. And when we break through that in an uptrend, right, then that's the continuation. But if we break down to the downside, right, instead of to the upside like I just explained, when we break to the downside, then we have a reversal, and the price is supposed to actually reverse and go in the opposite direction. So most people will try to take and trade there. But the interesting thing is, and that's what happens so often, is that people think it's a break in structure. They will take then this trade, and what will happen is actually price will go in the opposite direction. So most traders have seen that not each of these break in structure makes sense. And that's what we're gonna cover up in this bootcamp as well. But for now, let me show you how I mark market structure, how I read market structure, and what you need. And for that, guys, we're gonna go now straight into the charts. Let's go. Let me explain you now market structure on the charts as detailed as I can. And keep in mind, guys, this is not gonna be everything. Explaining market structure is a very complex topic because it involves different concepts as well to really see everything. Market structure in reality, how we're gonna learn it now in this video, is basically just understanding highs and lows, and that's it. And price is gonna break through them, and that is what we're gonna call break of structure. Let's go. So I'm trying to plant you a couple of seeds throughout this video, and when you're gonna finish the entire bootcamp, things are gonna make more sense. Trust me, I've taught this concept multiple times in my mentorship. I had already like 3 course versions, and every single time market structure was one of the most interesting topics to teach because there's so much to add to it. But yeah, let's keep it very simple for this video. So basically you see price moving like this. Price is creating a wave. right? Because market structure moves in general the entire time in waves, right? But in waves with a high, with highs and lows. So in this case here, you can see very nice. This is a low, right? And this is a high. And depending right now on what trend is gonna create, either it's gonna be an uptrend where the price is gonna go up, or a downtrend when price goes down, you will see then different variations on how this is gonna look like. So in this one, we talk about the bullish variation, which is the uptrend. So the price provides right now a low, a high. And what happens now is it's gonna continue from here to move higher. So it's printing in reality right now here a higher low and here a higher high. And what is right now the definition of all of these things? What do we need to know about this? Well, basically, price is surpassing the previous high and creates, because of that, a new higher high. And that's exactly what we'll come here and say, hey, this is a break in structure. And the characteristic of everything is that the market is printing this move up, which is an impulsive move. And that means also in this case, it's bigger versus this move, which is this move down, which is a corrective wave, and that is smaller, right? That's exactly why the price is printing a higher low, right? Like it's printing a low. This is an impulsive move up, provides you a high. It's pulling back, so it's correcting. It's a corrective move. And it's gonna provide you high low because it's continuing to move up higher. And this as a whole will tell you that this is an uptrend. Currently, it's in an uptrend. And your expectation is right now for the next candle to provide you right now from here, again, a smaller move than the big leg up here. So this is the bullish leg. And to stop somewhere, and then to continue higher and to reach this high and to even surpass that high, right? Because if it's surpassing it, it's a break in structure, and then you can call this again, because it's higher, it's a new higher high. And this low is a higher low. That's it. That's market structure, guys. That's the data that we can get from this concept. You will understand that the market is in an uptrend because it's moving higher and it's providing higher highs and higher low. And you will understand that the bullish movements, they consist of impulsive movements, and they are bigger than the bearish movements, which also will be part of each uptrend. Bearish movements are part of it, and it's the corrective move, and they are smaller. That's it. That's exactly how it works. And this game repeats for itself. So how people trade market structure is basically exactly like this. When the price provides a higher high, they wait for price to go a little bit lower, and then they buy it in the expectation it's going to surpass the higher high one more time. And that's basically what happens more often than not, right? Like at least this is the strategy for many basic traders. The thing now and the problem is that everything that goes up will also come down at some point. So this is going to happen as a result. As a result, right here it went up higher and so on, everything was fine. But now price is not moving higher. Price is moving lower. So while price was now still printing those high highs, and again here a new higher high, it starts to now shift. And the shift means the price provides now here a lower low, So it's lower than the higher low. That means it's a lower low. And then the price is pulling back. Now, it's exactly the opposite. So the move up right now is the corrective move, right? While the bearish move was the impulsive one. So this is, again, another difference. So it's exactly vice versa, the opposite. So this is bigger and this is smaller. So price now, the expectation is it's going to go lower. It's going to break structure here. And that means the price is providing right now, instead of higher highs and higher lows like it did before, it's providing lower lows and lower highs. And that's exactly the game the price plays. and so on. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, until it's shifting again. And then it's providing high highs, high lows, high highs, high lows, high highs, high lows. And that's it. And the thing, when the price is changing from currently here uptrend, then we had here downtrend. So when that change comes into place, this BOS, right, it's a breaker structure, but we can call this reversal. Okay, we call this reversal because it's reversing bullish market to bearish market. The same thing happens here, from a bearish market to a bullish market, right? From downtrend to uptrend. That's exactly how market structure looks like. So that's also the data you want to get from the market, all right? Very important, and that is also what you need to understand, is our time frames. You know, this is right now everything on one time frame. What I just showed you now could have been something on the daily time frame. And the market is in reality providing you something like this on all time frames. All right. And the trend, right, is not always the same. It doesn't mean because right now the daily looks bullish, it's an uptrend. That doesn't mean that the lower time frames are also bullish. At some point, they're all bullish. At some point, they're all bearish. But they can also be sometimes different. So one time frame is bullish, the other one is bearish, the other one is bullish. For instance, weekly bullish, daily bearish, 4-hour bullish, 1 hour bearish, M1 bullish. Right? That can be the case, but it can also be the case that all are bullish or all are bearish. So we can say when everything is one direction, that is the highest probability for that moment to be in, while this can also change very fast. As we know, a reversal can take place. And usually a reversal takes place every single time. You can see that no matter how many lines you draw, a reversal will always take place after a previous higher high or a previous lower low has been taken out. And then it breaks through here a lower high, or here if it breaks through a higher low. That's exactly, that will happen every single time. That's the moment in reality that you're looking for. Because what you want to do, and that is the job as a trader, is actually to understand what trend you are in and which trend you want to follow. That's exactly why we even use market structure, to identify that. So we see, okay, price is in an uptrend, so we look to buy, right? So basically, where is the most smartest time to buy? Well, basically when it's here, right? When it's low, and then to buy from here. When it's here, and then to buy from here. Now, we also look to buy here, but now you see price is not just pulling back, it's rapidly moving down lower, so it's reversing. So now it's smaller to understand, okay, it's a downtrend and we want to sell, all right? So let's put this into practice now, what we just learned. Let me show you this right now on a time frame. Let me show you this now, for instance, on the daily time frame, and let's understand right now how trend work. So basically, what we just done was on the line chart now the entire time. For theory explanations, it's only that way possible. We can also like go here to the line chart, so I can show you, for instance, how these trends look like. So very basic and simple here. You see how the price moves: higher high, higher low, higher high, higher low, higher high, higher low, higher high, and so on. It's exactly what we just learned currently, right? You would just see that sometimes, and this is gonna be the weakness of market structure, and it's a very big weakness that it have, and that's exactly why so many people are bashing on market structure and say market structure does not work, because what we just learned previously is that if the price moves down like this, and this is a break in structure, the expectation is that the price goes down, and the price here in reality goes down, but then it goes back up. So it's not really shifting, and we will learn this in the future, why situations like this take place and how to avoid them and how to understand what direction to follow. The same thing repeats itself here. Again, it's breaking through structure and the price goes up. One more time, even here, you will see the market structure most of the times when you look at it from that perspective, you will see very often that it fails. But for instance, here it worked out. It broke through it and it printed lower lows, low highs. Broke through this, again, it went lower. So everything is fine, you know. But again, here it failed and so on. You will see very often that this thing will fail in reality. It's not going to be that easy. But we want to focus now on the candlestick charts because that's what we're going to use, because the candlestick charts will provide you more details. And what we really want to know in reality is for market structure are those highs, right? So for instance, if you see here price breaks through this high, this is exactly a break structure. So we will identify currently here in this situation, this as the low, this as a higher high, this as a higher low. And now you see we break through this higher high, so a BOS, and the price now will stop here, will pull back here, and provides here then again a new breaker structure. And you will have now here in this case, in the context, we'll have again higher highs and higher lows. So higher high, higher high, higher low, higher low, and so on. And the market repeats this pattern over and over again. You will see it here, you will see it here, and so on. And that's exactly how price moves. Very, very simple. All right. And this is an uptrend. Let me also show you now, for instance, a downtrend, so you can see live examples of a downtrend as well. Let's go on a lower time frame in this case. You can learn a lot on lower time frames. That's, for instance, here. You see that very beautifully how price is moving down. So you see here, lower low, lower high, 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 and so on. And you see, you will get then the same kind of view. You will put this entire thing into a wave, because that's exactly what we try to do with this concept, to put the market in a wave and to understand what the real market direction is. And in this case, it's basically bearish, right? You can clearly see that. So again, here, price breaks through these points, and these are the breaker structures. And when they do that, the expectation is that the price continues to drop till at some point, as you can see here, it's starting to go in the opposite direction, for instance. So yeah, that's so far, to be honest, very, very basic, right? Like we will go in the part 2 of market structure into more things, and you will need to understand also time frames. But basically, let's just keep it that simple for this video to really understand what market structure is, because that's what market structure in reality is, just providing you this type of data, and you try to work with that. That's basically it. With that being said, guys, see you then in the next videos.